And those cyclical sectors that we really care about, take a look here. Energy stocks, bank stocks doing well, and tech is generally holding up very well. Some of the thematic tech stuff a little bit weaker. Consumer staples and healthcare lagging a little bit here. Want to look at that thematic tech sector again. Cathie Wood's ARK funds up fractionally at the open. Lithium, social media stocks, cloud computing stocks, generally flat to slightly on the upside. ARK just turned negative, but it was positive right at the open. So a lot of people trying to figure out what is moving the market right now, particularly those thematic tech stocks, the Cathie Wood stocks. And remember, there's three things that move the stock market. One is dividend growth. Two is earnings growth or lack of earnings growth. And the third is the market multiple, the PE ratio. How much are you willing to spend for $1 of future earnings at the present moment? Now, if you take a look at some of these thematic tech stocks, we can see very clearly that what's moving them is multiple compression. That's what's going on. So look at these just prior to the open this week. Roku, Block, Zillow, Zoom Video. These are big Zillow. Sorry, these are big thematic tech stocks. And you can see all of them down rather notably. This is just prior to the open. Now look at the multiple compression, and I'll show you why that's what's going on here. Look at Square, for example. At the PE ratio on Square at the end of the year was 90, and it dropped yesterday to 80. That's a big drop. That's a PE compression of about 11.6%. You know what the price change was for Block? 11.2%. There it is. It's telling you that it's multiple compression. People aren't willing to spend as much for that future dollar of earnings as they were in the beginning or at the end of the year. Look at Roku. It's the same story. Roku had a multiple of 134. That was rich at the end of the year. Yesterday at the close, it was 117. That was a decline, as you can see here, of about 13%. How much was the price down in that same period? 13.8%. You see, that's multiple compression. Take a look at Zillow. I'll give you the one last one here. Zillow was 83 at the, I'm sorry, Zoom Video here you're looking at. Zoom was 42, went down to 39. That's a drop of about 4.9%. The price was down 4.9%. That's multiple compression. And by the way, I'm not even including companies like Twilio and DoorDash and Peloton. They don't make any money. They got hit even more. So it's very clearly indicating here that the market is concerned about the prices that people were paying. And I've said this many times, Carl, Cathie Wood didn't lose the argument. Cathie Wood won the argument that disruptive technology would be a major driver of future returns. The problem is everyone bought into it and they drove the prices up to stupid levels. And now people are reevaluating that in light of higher interest rates. Carl, back to you.